All right, you mentioned it, the Augusta Rule. What is it?
The Augusta Rule. So it's derived from Augusta, Georgia, and the Masters each year, just allowing you to rent out your home, your primary residence, for up to 14 days a year and not having to report that income, not having to pay taxes on that rental income. And so what that allows business owners to do is rent their primary residence, have their business rent it from themselves. And so you're able to take the deduction at the business level and you don't have to report or pay taxes on that income at the individual level. But so that's where typically the social media campaign stops right there and just is captivating headline. But it really takes a lot of support and substantiation when it comes to documenting the rental income, the rental expense that you're taking at the business level. You want to make sure it's a fair market rate based on your area, based on local hotels or other Airbnbs around there, or if you're renting it as a studio, you want to make sure you're paying a similar studio rate there. So you also need to document who attended the meetings, who stayed there, what employees were involved. There's a significant amount of documentation that your advisor, that your CPA will help walk you through and make sure you're ready for any set of questions or any sort of documentation request from the IRS should that be requested. A lot of times it's not just think of a figure in your head and put it down and charge yourself $2,000 a night for your house when you wouldn't even pay a tenth of that. So there's a reality to it. But there's also a big opportunity that a lot of business owners can take advantage of. Your advisor will help you find that medium and let you sleep easy at night and make sure you're supported for any of that.
Okay. So I can't just deduct a $50,000 deduction for renting my house, my business, and then just shout Augusta Rule when the IRS asks questions.
Yeah, if it were that easy, I'd be out of a job. No, it takes a little bit more than that. So you want to make sure you're able to sleep easy with that documentation at night.
Gotcha. All right. I think one of you touched on this, but paying your kids. So I have two 10-year-old boys and a 6-year-old daughter. How am I supposed to use this?
Yeah, so the social media campaign is going to tell you pay your kids $14,000 a year. They don't have to pay income taxes on it just because it's under the initial threshold to reach income taxes. So what is the reality of it there is you're employing your kids and you have to document what they're employed for. It's got to be a typical rate. You're not going to pay your kid $14,000 for a modeling session for a marketing campaign when you could pay another kid $100 for it. There's a reality to it. You have to document what they're actually utilized for, what they're employed for, their purpose, and make sure that they're actually working throughout the year, because it's a true strategy that you can invoke, that a business can have, but it's just like any other employment agreement. You want to make sure you're paying them a fair wage for a fair amount of work that they're providing. And if it happens to be right around that 14,000 figure, then more power to you at that point. But they've actually got to be employed. They've actually got to be doing work. And then you can utilize it and make it an effective strategy to minimize taxes for the family as a whole.
Nice. And then does those kids have to file tax returns if you're paying them? So say you pay them $12,000.
No, so technically they're not going to have any income taxes there, and you won't have to file any sort of return for them. From a compliance standpoint, not a huge increase on them, and then also from an income tax standpoint, minimize the liability as a whole.
And then potentially have them contribute to retirement accounts and all this other good stuff. So lots of potential benefits, but just like with the Augusta Rule, not as simple as, hey, I paid my 2-year-old $14,000.
Yeah, exactly. It's a simple, simple request from the IRS of, hey, what did they perform? What tasks did they complete? That'll bust it wide open. So you want to make sure you're covered there. And exactly, like you said, since you're paying employment taxes on those wages, they're able to contribute to a Roth IRA if you wanted to start those investments early, max out those contributions for them at a young age so that they are building their wealth portfolio over the life of their career. And you can start them early and really maximize the possible gains from that over the life of their career.
Yeah, and now you brought up another good point there too, the employment wages. It's not just as simple as, I put $12,000 into my kid's bank account, so I paid them $12,000, right? It's
exactly, you've got to treat them just like any other employee. And even if we're talking a 6-year-old, it doesn't include having a year-end assessment of their performance. You don't have to do that with them, but you do have to put them on payroll, pay local and federal required taxes there from a payroll standpoint. Yes, it is more professional of a relationship than you would expect, and the social media will convey to you. So want to make sure you're doing it right, but at the end of the day, it is a strategy that's available to a lot of business owners. Absolutely.
It's a tool in the toolbox for sure.